The ADP report drops now. The print's 235. It's an upside surprise. We were looking for 200K, the previous number 135. It's an improvement then at 235,000. You see the initial reaction on yields. We go higher, 2 basis points higher on a 10-year at 240. If we can get the front end of the curve up, we can check out a 2-year yield. I imagine we're a little bit higher on that as well. If direction is anything to go by on a 10-year, we're up a basis point at 161, just punching a little bit higher on a 2-year as well. If the dollar's anything to go by, the dollar was already bid on the margin with the euro weaker. The dollar index just up by about 1/10%. No real drama here, and futures were positive going into the opening bell, about an hour and 15 minutes away, and that's exactly where we stay, up 0.4%. So, Steve, it's a decent number. It's an upside surprise on the ADP report. Is there any kind of read across for payrolls Friday?
No, not really, because the payrolls were much more seriously distorted than we saw in the ADP numbers, as you even went through in your numbers, and we'll see the difference on Friday. And I think you'd have to average the two, to be honest with you. When you average the two of them, we're running right where we were going to be running. But again, these things are in the backdrop relative to the FOMC decision that's going to take place this afternoon, and what that can imply for forward rates. I was kind of surprised by the discussion here in terms of the way the 10-year note moved up a little bit more than the 2-year note. I'm convinced that the curve is going to actually flatten from the front end as we go forward in here, because the market's not appropriately pricing in the 3 additional rate hikes that the Fed has been anticipating or telling us for next year. And I think that's the big adjustment in the curve, is a lift up from the front end.